All right. Good afternoon, everybody. My name is Ben Scribner. I'm the regional manager for the Northeast for Angel Oak Mortgage Solutions. We're going to give everyone a couple minutes to jump in. We know, we're a couple minutes to start, so jump in, but we'll get started here in a couple minutes. Hopefully everyone's having a wonderful Tuesday. Nice here in the Northeast. Of course, the Eagles lost last night. It's okay.
It was a brutal game.
Yeah, it was. Helped my fantasy, though.
The Lions didn't show up well on Sunday.
They didn't. That was pretty bad, too. But all right, we'll give it another. It's one. So, guys, we'll give it another 60 seconds, and then we'll get going. And before I start, I have to apologize. My youngest has decided to bring home the crud, so I'm a little raspy in my voice. So I apologize if you see me drinking a ton of water, but still gotta love the kid, right? All right, cool. All right, well, let's go ahead and get started, guys. Again, my name is Ben Scribner. I'm the Northeast Regional Manager for Angel Oak Mortgage Solutions. This is the product webinar for our full doc programs. Not very talked about in the non-QM space, but definitely still very important. I've been with the company for just over 6 years, but with me today is Drew Ruggieri and Al Wootton. Drew, you want to just introduce yourself real quick?
Sure. Hi, my name is Drew Ruggieri. I am located in New Jersey. I cover kind of the Philadelphia, tri-state area, some Pennsylvania, southern Jersey, some Delaware. I've been in the mortgage business for a long time, 24 years, and it's aged me. And anyway, so I've been with Angel Oak coming up on 5 years now. And I couldn't be happier. Great place.
Awesome. Al?
Thanks, Ben. My name is Al Wootton. I'm in the Detroit, Michigan area. I cover Michigan, mostly Michigan, and a few outliers, but mostly Michigan for Angel Oak. I've been in the mortgage business since 92, however long that is. I've been here for just over 4 years. And I definitely like the non-QM product, having come from mostly conventional and government product. Once you start to, if you haven't had experience with the non-QM product, you'll figure out pretty quickly that this product makes sense, and it opens a lot of doors for more borrowers and more options to take care of people.
Awesome. Thanks, guys. Before we get started, guys, for everyone joining, this is interactive, so there is a question box on the webinar. Please use it. Any questions we don't get to, we will definitely get you answers on those. But we have our wonderful regional manager for our inside sales team, Moses Benet, manning the chat box. So he'll be firing off answers for as many questions as you guys have. So please, please don't hesitate to ask scenario or program questions or what have you. So please don't hesitate to do that. We're gonna really quick. We always like to launch with a poll, guys, because it does let us know where all of our attendees kind of sit in the non-QM space. So if you could answer a poll real quick on who has closed a non-QM loan in the last 12 months, and we'll give that a couple seconds, and then we'll get some answers. It's always a good question though. Non-QM is still about, I think as of late, was 5 or 6% of their overall market. So there is still a ton of loan officers out there who have never closed a non-QM loan. So we're hoping that today we can bridge that gap a little bit. And the education piece of what these products are and what they aren't is super important. So let's see here. Oh, okay. So 33% said yes, but 67% of you said no. So that's awesome. That's pretty well split. 1/3 have, 2/3 haven't, which is great. So we appreciate everyone being on. We do want to jump into this. We know your time is very valuable, especially now. So a big part of Angel Oak is our resources. So we always start at angeloakms.com. Just about everything you could be looking for is located on this website. So always think angeloakms.com. Once you see the bridge, you're in the right place. So you can always go right to our mortgage programs. They have all of our programs, of course. Today we're going to be starting with our full docs. So our full doc platinum. Now this does say jumbo, but we're going to get into this a little bit. And Drew, if you want to go ahead and start kind of going over the program and hitting some of these highlights.
Yeah, absolutely. So correct, as Ben said, it does say jumbo, but we in the non-QM space really don't differentiate. There's a break for non-jumbo or jumbo. So as you see right there on the first line, it's a minimum loan amount of $150,000, and we'll go all the way up to a $4 million loan amount. We can use this program for purchase. You can do a cash out refinance, and of course you can do a rate and term refinance. All occupancies are available. Do owner occupied, second home, investment properties. It does require a little bit cleaner of a credit score of 680 is the minimum, and that'll get you up to an 80 LTV. But with the higher credit scores, we will go to a higher LTV. So as you can see, we'll go up to a 90 LTV with a 720. And really what you're looking for, or what you're going to utilize this program for, is anything that falls out of your agency, your conventional, or your jumbo. And what I mean by that is the very next line. So you may have some borrowers who had a foreclosure, had a bankruptcy maybe during COVID. Some things really affected them during COVID. And, bad things happen to good people. So you have that timeline where as long as they've been seasoned now for 4 years of a foreclosure, short sale, bankruptcy, deed in lieu of, modification, we'll be able to help them. It is a full doc, meaning standard documentation, talking about your most recent pay stubs, your most recent W-2s, and if you're self-employed, we're going to require the last 2 years tax returns. So talking about tax returns, as you can see there, we do offer for your self-employed borrowers, we do allow them to do a 1-year tax return. So if they may have had a slight, downturn, maybe back in 22, but they filed their 23 and it's really robust and you want to go full doc, we can certainly help out. What you're going to really optimize this program for, as I said, something that falls out of your conventional guidelines. So let's just say your buyer is purchasing a condo and you find out it's non-warrantable. Perfect program for that borrower. Let's say your borrower is a W-2 employee and they're looking to buy an investment property, and they want to title that property in the name of an LLC. Perfect program for them. Another valuable guideline that we have is we allow up to 6% seller concession. Anything I always say, and I know Al does say it's the same thing, anything that falls out or doesn't quite fit, you should give us a call and see if we can get him into that program.
Yeah, that approved and eligible. That's a big one, guys. I really love the platinum product because obviously the loan amounts go big. Everybody loves big loan amounts, of course. But when conforming loan limits start to become a problem, or say someone owns more finance properties than Fannie Freddie will allow. I mean, you have all of these niches that really keep that borrower in front of you. that just can't fit traditionally through the front door. So I mean, I think that's one of the biggest one. The one-year tax return program is extremely popular, and we're going to get into our asset qualifier program also later. That actually falls under this program. That's really, really cool. That we really enjoy. But you know, a lot of people think, you know, non-QM is just bank statements and DSCR loans, but it really, you know, there are a lot of full doc options for borrowers out there. And you know, the next program we're going to jump into, because again, these are just full doc, you know, other than the finer points of non-QM with non-warrantables and, you know, owning more than 7 investment properties and allowing a higher DTI and a little shorter seasoning, it's still a full doc loan. So it's not, you know, there's nothing overly complicated about it. It just has a little wider of a box. But jumping into our second program is our Portfolio Select. So this is a little different. And Al, do you want to jump through this one?
Absolutely. Thanks, Ben. Portfolio Select is, once again, this is another near miss product. Your FICO score is going to start at 640 in the door. That's going to get you a 75 LTV, and then you can get up to an 85. So if you've got, this product is solid for borrowers that are near miss, but it's also very, very good. It offers a lot more options for people that want cash out, which is quite a few of them right now. And it's going to give you options for cash out that you're not going to get with you might get an AUS, you might get a refer on that as well. If you're not sure, you know, if your borrower fits, this is just one thing I want to throw in to make sure everyone understands. You don't have to be an expert at this product. You just need to know our phone number. You call your account executive. That's what we do all day. We're going to direct you. You know, we'll take it from there. We can, you know, we answer our phones. We'll let you know what we can do. So if the borrower that this really caters to, you know, if you've got somebody who, you know, they might not qualify conventional, but they want a house, they want to get into a house now. Look at it like a stepping stone. It's a stepping stone into a conventional product. Today, yeah, we're going to get you into the house. We're going to give you this option. You know, you have a 640 FICO, get them in the house, and then in a couple of years, they can be, you know, a conventional refinance. The limits on this loan, a lot of people have seen the conforming limits have just gone up to 802, 650. On our loans, they're all non-QM. We don't divide them, you know, conforming, non-conforming. This starts at 125,000, and it's good for loan amounts up to 2.5 million. So this also opens doors. If you're looking, if you've got a jumbo loan and it's not cookie cutter, these are going to be options as well. When you're looking at rates on this, these are standard 30-year programs, and we'll get in some pricing in a little bit. But you know, there's nothing odd. There's nothing that's going to shock your borrower about this. You know, the rates aren't that far off. You know, if you're looking at an 85 LTV, or, you know, on the Platinum, if you're looking at 90, there's no MI on this, which can pretty immediately level the field when you're looking at a payment with a borrower. They're good on the, you know, purchase, cash out rate term on all property types. We'll get into the credit a little bit more later, but where this product, when you're looking at this saying, hey, why wouldn't I go FHA, or why wouldn't I go, you know, conventional? Well, we'll do 1 year seasoning on a foreclosure, deed in lieu, you know, short sale. So that's going to be a pickup for a lot of people. You're going to see that. That's a cue to call us right away. On bankruptcy, if it's a Chapter 7, we're looking at 2 years seasoning on a Chapter 7. If it's a 13, it's 2 years seasoning, but it's 2 years from the date it's filed, not 2 years from the date it's discharged. So if you've got somebody that was discharged yesterday on a Chapter 13 and they paid all the way through and they hit the FICO score, give us a call. That's a borrower that we could do one day out on Chapter 13. The DTIs on this can vary depending on the LTV, but it's generally a 50 back end, and those are pretty tight. We'll get into the pre-qual a little bit with you, but we don't run AUS, but we do a pre-qual, which is your AUS, and we'll get into that. As far as you know, when you have borrowers that have credit, maybe they can't hit a 75 LTV. Gift funds are allowed in this program after the borrower has 5% minimum into the transaction plus their 6 months reserves for PITI. So this is a solid product for people that, you want to give your customers everything. You want to give them more options. Well, these are more options.
Absolutely. I think the big thing, is for this program is these are people who did have something happened, right? I mean, Platinum, even though, it does have lower seasoning, that's still for your pretty choice borrower. For this program, I mean, with the lower seasonings, these are people who have gone through a life event. I mean, that, and, we always like to say, we need to work with borrowers who are outside of a life event, not currently in one. So that's kind of a big part for us. But, if somebody had something that, went on through COVID, we had a lot of pain. Not everybody was sitting back watching Tiger King, right? There were some people who really did have, have some serious impact in their lives, and now they're looking to get back into home ownership. So, these are options for you to discuss with your borrowers, and absolutely, FHA is one thing, but hey, if they can't go FHA, this is always another option, and the gift funds, really make it flexible for borrowers that, who just have that 5%. They're looking for that 95, that 95 LTV, but they're a year out from a foreclosure. That's, that's obviously a bridge that not too many people can go down, but, with the gifts, well, family, sometimes they're willing to help, and when you have a solution for them. I always like the 50 DTI is always a big piece with no front end. So, that's it at that 80 and below, but, one question came from Clay. Homes for sale, is there seasoning that the home has to be off the market? And Moses actually already answered that, and I'm not sure if everybody was able to see it, but yeah, Clay, I mean, the big thing is that we don't want a home that's for sale coming in our door. We do want it delisted before the application date. We understand that, hey, some people may have been making a decision and, felt like they needed to sell, or, well, maybe now they can get away with the cash out. Maybe something's changed. Maybe they weren't getting an offer that they liked. So, that's always an option for you. But thanks, Mo, for answering that one. That was perfect. But, a big part about non-QM, and this is not just our full docs, it's also our bank statements and DSCRs, is credit. So credit is very important to us, obviously, especially on a bank statement loan or a DSCR. But even still with our full doc programs. Al, if you want to real quick jump on, the minimum credit and everything for Portfolio Select, and we'll let Drew kind of talk about Platinum, the minimum credit standards for that.
Thanks, Ben. Minimum credit on anything that we're looking at, we're going to look at for 3 trade lines that are open for 12 months. We're going to look for 2 trade lines that are open for 24. So it can be either or. And that's open and not necessarily active, because you can have people that open trade lines and they don't really use them. They just need to be open. That's in the door credit. We're going to look at a minimum of 2 scores out of 3. But when you bringing up scores, one of the nice things about credit qualifying is we'll use the middle score of the primary wage earner, and not the lower of the 2, which you're going to run into in a lot of situations. And a lot of times your wage earners do have the higher score out of the 2. As far as the tax returns, we will also use on Portfolio Select, we'll use 1-year tax return. That's just as long as they've been self-employed for 2 years. So it gives you an option on a full doc to use 1 year. On the purchase, once again, it's a 640 FICO that gets a 75 LTV. And then we do, if it's a purchase, if that LTV hurts, you can get gifts on it. One thing you're going to hear about any of these products, or one thing to remember, these are solutions, these are options. We're Angel Oak Mortgage Solutions, and calling us when you have a loan that doesn't fit, that's where we can start to find them. If you're on a cash out, a 640 will get you a 70 LTV, but it jumps to, with a 660, it jumps to an 80 LTV. So that's 80 LTV cash out. 660 FICO. That's something that, we go in, you price it, you look at it. It can work. It can help your borrowers, especially borrowers that are, if they're recovering from a credit event, maybe they've got some debt that they want to get paid off. There's your cash out. It's a great way to do it. If you're looking at second mortgages, sometimes the rates might be a little bit higher on the seconds, or the FICO scores really more so would be a little bit higher. And that would restrict that. So this is going to open up some doors there. Now, as far as the credit rates, when you're looking at it, we'll allow 2 times 30 on a mortgage in the last 12 months. So if you've got somebody, we've seen, somebody, they transfer servicing, they have a mortgage late, whatever it is, they have a mortgage late. We have the ability to look at that and to do a loan for them. If they have a 60-day, we don't allow it in 12 months, but we will allow it in 24. So that's going to give you give some options, on credit. Collections, charge-offs, judgments, things like that, they are allowed in the last 24 months. Generally, they're going to need to be paid off unless they're medical. Medical, we look at differently. And if there's payment agreements, we'll look at them on a case-by-case basis if they've been paying them for 6 months or more. If there's things that are judgments like tax judgments, once again, we're going to talk about the pre-qual, but when we do the pre-qual, this is when we're really going to catch all this stuff. You got a borrower that, if they want to purchase something, let's do a pre-qual before they stroke an earnest money check. That way, you're going to be able to give, a solid pre-approval letter to your customer. You're going to get something in writing from us before you give something in writing to them. As far as the foreclosures, once again, 12 months from the completion date. And then
that's a big one. The detransfer date is, the date that we're going to use. That's always that little caveat that, a lot of people don't kind of think of, is it's not just when the foreclosure happened, it's the detransfer date. So sorry, no, I just wanted to jump in there a little bit.
No, absolutely. That's an important detail because, and those are the kind of things we're going to make sure that we look at right up front on pre-approvals. And, as far as pre-approval, it's a good spot to bring up exceptions. If you're looking at something and you're just not sure, we have the ability to look at something with just a credit report and a 1003, a TBD 1003, and we can actually submit it for an exception in writing with just these items. So, it's going to give you it'll save you a lot of time.
Yeah.
But that's most of the credit. That's the broad strokes anyways.
Yeah, and exactly to Al's point, to over 30%, I think it's like 34 or 36%, it's somewhere in there. Over 30% of our loans have exceptions. So, if you have a borrower that does have that 60, that did have that collection, did have that, they hit that problem, so it's still sort of falling out of our guidelines, please don't hesitate to send that in to us to take a look at. We'll get into more about Angel Oak Company, and sometimes we'll start there in the beginning of who Angel Oak is and the strength behind Angel Oak and all of that. So we'll get into that kind of after we wrap up Platinum here. But understanding that we want you to send these scenarios to us because there are a lot of things that we can do to get these deals done for you. So, Drew, if you want to talk real quick about Platinum credit requirements, and I apologize, we probably should have just had you wrap into that as soon as you talked about Platinum. I don't want to confuse anybody on the call, but I want to talk about that real quick, and then we'll get into some different stuff.
Yeah, absolutely. Well, it's actually, and I love what Al said, it's a stepping stone. So, consider these programs as a stepping stone to get your borrower possibly back to the conventional financing. And it's actually a good segue. So the portfolio select, and as I mentioned before, bad things sometimes happen to good people. So you got your portfolio select, and then you're stepping up to your Platinum, and then you're back to your conventional financing. So, Al did a great job in describing and laying out what we require for our credit. And to that, Platinum is just a step up. So it's got to have a cleaner profile. So you're 4 years out from the seasoning of the foreclosure and the bankruptcies. The lates that you could have on Portfolio Select, you can't have them on Platinum. The credit score has to be higher. Yes, we are still looking for, I always say the 3 for 12 or 2 for 24 on your trade lines, but you just can't have that minimum. You just can't have 3 trade lines for 12 months with $500 limits. We want to see some depth. We want to see some higher limits on those cards. Some mix of some trade lines, some installment loans, some auto loans. So again, the name, kind of details out, it has to be a little bit cleaner of a profile of a credit. And then what that'll get you is it get your borrower a better interest rate. Get you a higher LTV, higher interest rate. As Al said, the higher LTVs, anything over 80 does not come with mortgage insurance. These are portfolio products for us. There is no AUS. And please give us a call, because something that you may look on the website and say, you know what, it doesn't quite fit. We've gotten some things done that you say, oh my gosh, I can't believe we got that done, with compensating factors, just like on the agency side. If you're looking for a little bit of wiggle room here, you have to give us a little bit of wiggle room. So if the score isn't there, but you have a very low LTV, or the borrower's been at his job for more than 5 years, we have plenty of reserves. Those all go into what we're taking a look at during that pre-qual process. So just think about it, a little bit of step up. Platinum's got a little bit of cleaner credit profile, but again, as Al said as well, don't think you have to be the expert. Just remember our phone number and give us a call.
Yeah, and I like that. I like that, Jeremy, especially when you're talking about loans up to 4 million, right? So when we're looking at obviously portfolio being 2.5 million, that's still a tremendous loan amount. But that cleaner credit, that more credit depth, going up to 4 million is pretty aggressive. That's one heck of a loan. So, we do want to see some real depth when you get to that.
And when you're talking about, our matrix, I don't want to go too deep into our matrix, but you see it right there on the screen. You get a 90 LTV with the 720, that'll go up to a $2 million loan amount. 90, a $2 million loan amount. Not going to find that many places.
Yeah, especially with IO available. And speaking of, sorry, I just might have stolen your guys' thunder. We have a lot of people, and again, all of the occupancies. I think I don't know about you guys, but I was in production for quite some time. I always kind of tended to see IO as more on the investment side or on the big jumbo side. So Drew, I'll keep it with you since we're on Platinum anyway. Do you want to talk about IO real quick and what that means and qualification on that?
Sure, absolutely. So you're going to need at least a 680 to get in the door, and that qualifies you for the interest only right off the bat. And so the way we do interest only is we're going to lengthen the term to 40 years. And what we're doing is we're putting a 10-year interest only on the front of that 30-year fixed. So it gives the opportunity for a lower payment for those 10 years. And what we're also going to do during that time is we're going to recast that payment every single month. So if you have someone who wants the option to make an interest-only payment, but say, you know what, I have certain times of the year that I get a bonus, and I may want to pay down my loan. I can do that, and we'll recast it, and they'll see the benefit of lowering that balance the very next month. We can go up to 85 LTV, and you can still qualify for interest only on the primary residence. And then we'll do 75 LTV for second homes. So you're going to qualify on the 30-year total payment. So they still have to qualify on the normal amortization, but it gives the borrower the lower payment for, up to 10 years.
Yeah, and hopefully there's some California folks on this call, or Miami guys. When you're running in those higher dollar amounts, that can be a big difference in not only affordability, but just in payment, and for borrowers to feel comfortable buying that, because we all know where valuations are right now. So it's kind of huge in that regard. One thing we haven't touched on yet, and Al, if you want to jump into this one. Non-warrantable condos. A lot of conversations around non-warrantable condos right now, right? Again, this is a national call. I'm sure we have people from all over the country on it. Always seems like every non-warrantable I ever hear about is on the East Coast, from Miami to New Hampshire. But I'm sure there's non-warrantables everywhere. So Al, if you want to jump in and just kind of give a brief overview on the non-warrantables on the full docs.
Absolutely. Non-warrantable condos, they're pretty basic. We're not talking about, barn dominiums, although I've seen some very nice, really nice barn dominiums I would live in, actually. It's more of just the condo requirements. When you're looking at a non-warrantable condo, I'll get into what we're looking at and what you want to look out for in a second. But the cool thing about it is you can send us your questionnaire, not your 1003, and everything else, a questionnaire. Once again, before your borrower strokes an earnest money check, get us the questionnaire, and in 2 days we can tell you either, get us a budget or something else, or this is approved. So that's something that we can do either with your whole pre-approval or just with the questionnaire. But that's something that we do offer, and we do. Once you're approved, this is a property type. It's not a program. It's a property type. So there's not a change in the LTV. So if your product is good to a 90 LTV with a condo, warrantable condo, it's also good with a non-warrantable condo. Once we approve it, you're good. The only time you're going to run into a cap on that is if there's an exception that's tied to it. Like I had one that came in, beautiful places. They were in Savannah, Georgia, non-warrantable condos. We approved it, but we capped the LTV because they were 1-bedroom condos. They were small. They were like 500 square feet. So something like that, that's where you're going to run into a cap if there's something else tied to it. But if we approve the condo, you're good to go. We hit the price, but we leave the LTV alone. As far as, a couple of things let me give you the big things to look out for. As far as, we have an answer key. We can send you our condo questionnaire with an answer key that's attached to it, so you can see. The answer key tells you the guide, the criteria. It gives you what you're looking for, what is a problem if you run into at certain percentages. But the two big things that you're going to hit with a non-warrantable condo is going to be the budget at 10%, and that's something that we can't get around. The reserve budget needs to be 10%. And the second thing is investor concentration by one investor. You can have a building that's 100% investment properties. We're not concerned about that. If you have one person or one entity, like an LLC, that owns more than 20% of that, it throws the risk off, and those we're not able to do. So, if you're looking at one from the outside, those are the two tires to kick first. As far as if you're looking at things like litigation, I get a lot of people that'll call and, you have to fit non-warrantable into non-warrantable. Litigation might not be something to do with the fact that the condo is warrantable. But we'll look at that. We can say, okay, this is a minor thing. It's a slip and fall on a sidewalk or something like that. It's not gonna kill the deal. But things like structural problems, that's not non-warrantable. That's a structural problem, and I'll get a lot of calls on those. But if it's something that here's something where we did have a structural problem, they couldn't get it done conventional. We looked at it. Conventional was kicking it because, Fannie Mae uses the project management, the CPM, the condo project management database. Well, the work was done, but it hadn't been updated in the database, which that does happen enough. So, but we saw it was done and we were able to do it. So that's where you can fit, something that, into the non-warrantable program, or that's when it's a good time to check it out with us.
Yeah, no, that's awesome. And I had one, I had a deal, it was a non-warrantable condo, and the entire parking garage was falling down. And it's like, well, it's a bit of a problem. I always think of that way whenever I'm talking about non-warrantable. It's like, well, would you move in there with it, if the place doesn't have windows, or, there's water running down all the units? Like, no. Would you lend them your money? Yeah, that slip and fall, or, something goofy that has nothing to really do with the building itself, just some, an activity that happened around it. That's something pretty easily to get around. I always say, like, you kind of know when you see it, when you look at it, like, ugh.
Yeah.
When you read the reason for the litigation and you're like, ooh, that's normally going to be your problem. But perfect, Al. I appreciate that. We definitely want to get to one other program, because this is our full docs, but our asset qualifier, before we get into quick quote and our systems and marketing and all that stuff. So we got, we want to keep trucking here. We want to be cognizant of everyone's time. Our asset qualifier, I actually really love this program. This is one of my favorites. They don't come around, all the time. They're not as popular, say, as bank statement loan or a DSCR loan, but they are very cool when you run into them. So, Drew, do you want to take us through?
Sure.
That qualifier?
Yeah, absolutely. So, just real quick, we'll run down the bullet points there on the screen. So, asset qualifier, again, you kind of think of someone who says, "Oh, I need an asset qualifier." You think of this huge, big, huge loan amount. But again, minimum loan amount is not terribly high. It's $250,000. We'll go up to $3 million loan limit. You're going to be able to use this on purchases, cash outs, and rate and terms. So the caveat is it's only going to be on primary residences. You can't do it on second homes or investment properties.
Well, exception basis.
Correct. So I always say there's never a true no. We'll look at anything. So, or almost anything. So this one is for your primary residence. We're not going to verify any employment, any income. So basically there's no DTI calculated. That section on your application should be blank, so we don't want to see anything. Talking about it's a little bit, it's under the platinum umbrella, but it's a little bit stepped up. So we want a little bit cleaner of a credit. So you can't have any foreclosure, short sales, bankruptcies, anything in the last 5 years. Interest only is available. The way the asset qualifier works, basically, I always say, short explanation is the borrower should have a lot of funds, a lot of assets, and it can be mixed to, liquid assets, retirement, stocks, bonds, mutuals. There can be a huge mix of those funds. And what we're going to do is we're going to take a look at what the funds were 6 months ago. So we'll need a statement from 6 months ago, and then we'll need a most recent statement. Okay. And the way you kind of calculate is what if they qualify for is you take your loan amount, and I use, a purchase transaction, say to your loan amount, plus your down payment, plus your cash to close, plus all of their debts that they have. And that's what it says times 60. So for the next 5 years, got to look at all their credit card payments, their car loans, anything else that they may have, multiply that out by 5 years. And they have to have that amount or $500,000, whichever is greater. So if the loan amount plus all of the debts plus everything only equal, like say 400,000, we want the borrower to have at least 500,000 after everything is said and done. So they've paid their closing costs, they paid their down payment, and they need to have that amount left in their accounts. So as you can see on the right-hand side there, so it's a great tool for someone who, has the funds, but just doesn't have, the ability to verify that income or currently has, some employment.
Yeah, and one thing I really do love about this program is that it's not asset depletion. So a lot of people will confuse the two. These assets don't need a distribution setup. These assets don't need to move from where they are currently. That's what, like, when we get into marketing, a big part of this is how loan officers can actually expand their referral networks by talking to CPAs and financial advisors. The fact that this is, people don't want to take their money out of the market, especially not recently. That's a mistake, right? Nobody wants to go stroke a check to Uncle Sam to take their money out of the market to go buy a house. So, for our borrower, it's really the best of both worlds because they're able to get what they want done. They're able to buy their home, second home on exception basis, but most of the time, assuming it makes sense, we do we will do that. And all of their assets don't move at all. So it's aggressive from that perspective. But Jen Stanley just asked a question for the asset qualifier, assets in the personal name only. That's a great question. What about business assets, Drew? Does this program allow business assets?
Yeah, so as long as you can show that the borrower, then you'll have to show ownership percentage of that business. So as long as they have 100% owner of the company, sure, they have 100% access to those funds.
Yeah, that's a big thing, Jen, is we can't give the borrower credit for money that's not theirs, right? That's, if they have a business partner, well, we can't count 100% of the assets if they don't own 100% of the business. So that's always something to keep an eye on. These loans are actually very quick as well. I mean, when you think about it, there's a 4506, you're an appraisal and your assets and a driver's license and a purchase contract if it's purchased. That's pretty quick. Again, it's a 75 LTV, but you have people who are high net worth individuals who don't want to take their money out of the market, especially considering where everything's on fire right now. It does let them do what they want to do, and at the same time, they're not going to have to lose out on any capital that way or any penalties, tax implications. Your financial advisors love this program. So if I were every loan officer on this call, I would absolutely add financial wealth guys into your marketing mix about an asset qualification, not an asset depletion. That's kind of the program at a gist. Again, it does fall under our platinum program, so it is that tighter credit. Especially this is a no income, no employment, no DTI, own a rock. So when you start getting out there, then we really the borrower's got to be pretty clean credit wise. But I don't know about you, Al. I've never seen dinged credit on some borrower who's got $2-3 million in the market, right? I don't know about you, buddy, but most of the time, unless they're doctors, because we know doctors always have a couple blemishes out there, you don't normally see it. But yeah, so that's asset qualification, guys. Huh? Say that again? Oh, sorry, I spoke over you there.
No, I was just saying pro athletes also can sometimes have challenges paying their bills.
Yeah. We did one in our region. It was Maryland. It was a former NHL hockey player. So they're retired and they've got all their money tied up and invested wise and all of that stuff. And hey, they wanted to go buy their $2 million next house. So we were able to help them out pretty quickly. So pretty interesting. When you run across these, again, this won't be some very common program that you'll see. But when you come across it, you definitely want to be educated on it. You want to be comfortable talking about it because when you see it, these are really fun loans. They're fast and they're big. So we all like that. Real quick, we definitely want to get into quick quote. We're running about 15 minutes. We definitely want to show you guys how to get in touch with all of us. Whoever your local point of contact is. If you don't know who your local account executive is, please send anyone a message. You can always send a message through our website under the contact section, and we'll put you in touch with your point of contact. But anything everyone in the field, anything you need, definitely give us a shout. But in order to send us a scenario, a tonneau questionnaire that you want us to review, things like that, you always want to come again, always to angeloakms.com. And our non-QM quick quote, well, I guess we'll start there. It is a great tool for a multitude of reasons. One, all of our pricing is live. So all you need to do, and this is mobile friendly, so you can always come to our website and you can price out any scenario. So I'll just work one up real quick, but let's see here. Let's just say we had a 600,000. We do have second lien products, so the HELOC, so you wouldn't count here. 780. We'll just go 80. Maryland, sure. Since Baltimore lost their second game, we'll do Maryland. We'll do full doc since we're talking about full doc right now. But we obviously offer occupancies, borrower types, your lock duration, escrow waivers, and IO comp. You can always price in your lender paid comp in here as well. If you're set up for lender paid comp with us, you can always price that in. But here's the two programs. So this will give you an idea of where of where this is. An important thing is we can do exceptions on this. So if you have a little, you're a point or two shy on a specific bucket to get that LTV up a little bit, definitely still send that to us. So I'll give you an example of what happens if no programs are available. So if you get this, either something's not entered or something just isn't qualifying. But if that happens, don't give up on it for sure. Definitely just still send your account executive a message, let them know your scenario and what you're trying to do. But let me punch that back up so we'll show them how to submit a pre-qual. And Drew, I'm kind of stealing your thunder, but I think I was going to have you talk about this.
That's okay. That's all right. So I always say the same thing, Ben. So everyone needs to understand that. So that pricing, again, as Ben said, is alive. So meaning any of those variables in the drop down, you change any of those variables and the pricing will update. So I have lots of loan officers, which I'm sure Al does as well, say, listen, hey, guys, I have a borrower. He wants to put, anywhere between 20 or 25% down. Okay. So let's go through the scenario. All right, well, here's your pricing at 80, but you know what? It may be beneficial with that guy's credit score to, let's take a look at what the 75 LTV pricing is. And it could be significant, depending on what program it is, depending on what the borrower's credit score is. So you literally can get that up to date in seconds. So
yeah,
again,
that just dropped that off, pretty significantly.
Correct. So for another 5%, now you're 6.5. And Ben was in that second step. So what you do is you to see the whole rate stack, you click on the view rate square there. And I have lots of questions as well. Okay, so well, can my borrower buy down the rate? Absolutely. So they can pay 1 point and you can get down to now 6 1/8. Okay. So this is, again, the pre-qual system. So in order for us to take a look at it, maybe get an exception, get you a pre-qual, you click on whatever program that you're looking for and that rate, click the radio button, you hit select that option. Sometimes depending on where your screen works, you may have to actually scroll up to see that you're actually on step number 2. If you have a MISMO 3.4 already created and exported out, go ahead and drop that in there right now. It's not a hard stop, so you can just hit next if you don't. Third step is you'll see your scenario that you input at the top. You want to select your account executive, whether that's me, whether that's Al, whether your account executive, whether you don't. we'll get you in touch with who is your direct point of contact. Next couple points of information. What'd you say?
Go ahead and put Al in there for now.
That's fine. Hey, so the next couple points of information are about you. So your company name, your NMLS, your name, the phone number, the borrower's name. And as you scroll down, here's where you get the option and the opportunity. There are two, on our full doc programs, there's really only two things that we need. You need your 1003, which we talked about in the beginning a little bit, but just like on, your in-house and when you're talking to an underwriter, I cannot stress enough, please be complete and accurate as possible on your 1003, okay? Because we're looking at it. If we're submitting it to our credit risk desk, all they're doing is they're looking at your 1003. So if you have missing information, you don't have all your information in there, they really can't make an educated, answer or give us an answer about our exception if all that information isn't there. So you put your 1003, you put your credit, you can put your 1008, and then the additional documentation, as Al said, if you have a condo questionnaire, you have something, hey, can you take a look at this? We need to get an exception on this. I'm not really feeling warm and fuzzy about this. Go ahead and drop it in. And then once you hit submit at the bottom, it'll electronically get put into our system. I call it our pre-qual system. We can then review it and then push that file on to our credit risk desk if we have to, if we're looking for an exception. Or if not, I always say, I'll get back to you within 24 hours with your pre-qual.
Absolutely. And, for income on this, guys, we're going to go based off what you guys are calculating also. So as account executives, we're not underwriters. We're not going to calculate full doc income, but unlike bank statements. So bank statements, we actually take that and we run it for you and we determine the income on a bank statement loan. So on a full doc loan, we are going to go off how you're calculating. And then obviously once underwriting gets a hold of it, they'll do their own review. So yeah, I mean, guys, this is really designed to be super easy. Hopefully, you can't upload a pre-qual technically from your phone, but you can price out any scenario on your phone. It's extremely mobile friendly. So, if you're ever out in the field and you get a scenario or you get a guy and, they're like, oh, hey, would this work? Punch this up. It'd take you 2 seconds and there's nothing really to it. And then, hey, if something works, or if you want us to take a look at something, go ahead and send us up a pre-qual. And we'll, again, it's exactly like Drew said, give us 24 hours. We'll get back to you and we'll let you know, yep, this works, or no, I'm sorry, it doesn't. So we're not going to, one thing that I always preach at Angel Oak is we're not interested in blowing up loans in the 12th hour. That is not something we ever want to do. That's why we do pre-quals. We're going to get all of this stuff vetted out up front. So we're not wasting your time putting the money out, borrower money out for an appraisal or anything like that. So that's important for us in our partnership with our brokers, is that we don't want to waste your time. I hope everyone on the call appreciates that. We're going to get a good look at this and we're going to be able to find any issues, get them solved. Certainly if we can. If we can't, then you didn't really waste any time. Nothing worse than a yes guy in the wholesale space, right? You don't want somebody just saying, yeah, I can do that when they can't, right? I think probably everyone's experienced that once or twice. But yeah, guys, that's our quick quote program. Again, it's right off angeloakms.com, right in the center. There's a secure upload also. So if you just have a questionnaire you want us to check, you can always email it directly to your account executive, or you can always just go to our secure upload. If there's any personal information or NPI, what have you, you can always just upload it there. We're running a little low on time, but Al, we definitely want to get into our marketing piece. So, we kind of talked about the programs, talked about how you send it to us, but how do you go find these borrowers is always an important piece to this, of course. So, Al, it was going to time me out. Hold on. There we go. So
while you're logging in, thanks. Marketing, I've seen marketing over the years, and sometimes it's just fluff. I mean, sometimes it's because it's not meaningful. You don't really connect with anybody with it. Non-QM has some very solid marketing options for you because you're going after people that fall into a couple groups for the most part with the product as an overview. It's going to be people that are self-employed, people that are buying investment properties. So you know who you're looking at. When you look at these programs, now we didn't go through all the programs today, but since we're talking about marketing, I'm going to rope a couple in. Something like a bank statement loan. So you can call your account executive. We'll show you how to draw a straight line from the product to who you can market with it. Who can you market with a bank statement loan? CPAs. Without a CPA, they're why the bank statement loan exists in the first place. So, you go into, what kind of conversation you want to have a meaningful conversation with a CPA. You can print off some of the marketing that we have. There's flyers in there. We'll take a look at that. But you can go into a CPA's office and, ask them if they're interested in a loan for a borrower where they don't have to reinvent their customer's tax strategy to qualify for it. So you're talking about their customer who can be your customer. If you're curious about this, I know a lot of you guys are self-employed. You probably have a CPA. Call your CPA that does your taxes. Call your tax person. Bounce it off of them. You'll start to see that with these products, people that are self-employed, they use CPAs. They really value their CPAs too, and their financial planners. They really value. A lot of times they'll meet with a CPA and a financial planner at the same time. And so you can, if you want to get their attention, you got a good shot with these products because you're getting to them through their customers. So this marketing, Ben, if you go into the presentations, guys, we'll come out and we'll do the presentations with you. It's really simple. I've done a bunch of them. I'm not Al from Angel Oak. I'm Al from a product specialist. It's your company. I'm just a guy that comes out and talks. So, we've got the presentations in here. I've actually got my own that I designed, but you get in front of realtors. I've got people that just they'll set up a lunch and they'll blast out a bunch of emails they'll get email lists from real estate for people at real estate companies. And they'll say, hey, come out and hear our, presentation about whatever it is, buying investment properties or something, and lunch. And they'll show up, they'll respond, they'll show up. Or if you have realtors that you work with, we'll come out there. Your account executive from Angel Oak will come out there and we'll talk to your realtors for you. We only talk for maybe 10 minutes, but I'll promise you one of the first 3 questions that the realtors are going to ask when you're talking about products like 1099 borrower products, which realtors are also paid 1099. When you're talking about, DSCR investment property loans, one of the first 3 questions I get every time is they'll put their hands up and say, can I use this product for myself? And the answer is yes. So, it's a great way to get borrowers, but it's also a great way to get in touch with sources. Also, investment property buying groups, you start Googling them. There's county groups, there's state groups, there's associations. You can get in and talk to them. I got in with a guy, talked to a group of investors. There was a realtor there when we talked about the investment properties who took him aside, the loan officer aside after we were done, and said, I'm with the Keller Williams investment property buying specialist realtor group, which I didn't even know one existed, and neither did he. And then the next month we were 30 realtors that specialize in investment properties. So marketing at Angel Oak, I'd recommend it. There's also social media. People will use the social media cards. They're cut to fit the right social media. So if it's, it'll say, whether it's Pinterest or Instagram, you're just going to find it. It's going to be under the product and it's cut the right way so it doesn't look silly when you post it.
Yeah, and the big thing is all delabeled. I always like to point that out that, guys, this is marketing for you. This isn't marketing for Angel Oak. We're here to help you support your business. So, we want you to use these on your behalf. I pulled up a sample flyer. I think this looks very basic because I didn't put my picture up here because you can do the logos and photos and all this stuff. So don't judge me on this. But you can come in and punch in all your information, put your pictures on, all of this, and so you can customize this completely. To give you an idea, I mean, we have Spanish, every program highlights, even our appraisal waiver for our second lien positions. So we do have a pretty robust marketing department that are always great at adding and updating and keeping all of this fresh. So we always like to point out our marketing for everyone because we want you guys to use this. We want you to partner with us, and we want to work together and get some loans closed. We're about out of time, guys, but Drew, real quick, do you want to give a quick 60-second wrap up or?
Yeah, absolutely. So we talked about a lot of information about these programs. We could talk for another hour on, different scenarios on how we can help you. But Al said it a couple times. I think I said it a couple times. Number one thing is if you have questions, just call us, just email us, go to the website, reach out, ask for contacts. We're here to help you. Anything that you think that, or anything that falls out of your, what you can do in house, whether it's self-employed, whether it's investment properties. I know anyone is open to helping and being able to get you a quick answer. Again, as Ben said, we're certainly not going to, last thing we want to do is, I'm not sure. We're going to find you the answer and we'll get you help.
Awesome. Thanks, Drew. Al, anything in summary?
I'll just give a second to everything that Drew said. And I mean, with this product, what is non-QM? Non-QM picks up where the other stuff leaves off. You got the file on your desk. Don't scratch your head and try to read guidelines. Call us. You want to talk about some marketing options, call us. Do you have to be an expert at non-QM? No, but you do have to be an expert at our number. You got it. And you are, as we say in Detroit, armed and dangerous. So that's it.
Awesome. Well, thank you guys. I appreciate everyone for joining. Hopefully you'll catch our next webinar, which I believe is in the first week of October. I think we're doing DSCR loan and bank statements in October. I think I'm going to be yours truly will be hosting, I think. But we hope to see everyone. But if you have anything that you want us to take a look at or questions, concerns, please reach out. Thanks, guys. Have a great one.